is spot gold. And spot gold here I'm showing on the daily. You see the beautiful run of all the moving averages. The move is historic, as we explained in several other videos. That is like the 1 2 1 2 3 4. We are coming close to the end of the third on this scale. If so, lateral movement, we'll see the market pausing. It's not a bad thing, it's excellent. We'll get some correction. I don't know how far it's going to go. I doubt that it's going to go back to 4,000. Anything could happen, but I don't think it's going to go back to 4,000. 4,100 maybe touching the 10 moving average. As you can see now, it's really riding on this pace. You can see the pace of the 10 moving average, and you can see that it came on several occasions to touch it and bounced off. Here came near, here came very, very near touching it, bounced. So yeah, we could see it going back to 4,200, 4,150 or so in the process delivering that fourth wave, and it is going to go higher. It's going to continue. This bull market is has long legs. Here's the chart for silver. Silver also, in my opinion, is coming close to a point where it's going to finish the run that began way back here. If this reading is correct, I have now modified it. Some of you might have noticed that I modified it. I'm going to perhaps spend a minute explaining. Just a sec. Let me go to the weekly. Now, you're all aware that we struck a new all-time high. Yeah, not adjusted for inflation, but we do have a new high. Yeah, so it's right there. And I think the most sensible way of dividing the price action here of the previous years is to take the E leg and the here. That's a huge triangle. Yeah, it ended here. That coincides with the price action in gold, in several other major funds of gold and silver, etc. So I'm quite comfortable starting to count from here, and I have a clear 1 2 3 4 5, and I have a very clear ABC. Good, that's very clear. Now, if this reading is correct, and that is 1 2, you realize we are just in the third wave now. There is no top. What top? No, that is not the top. Again, it leans heavily on this interpretation that this is an ABC. And if I go with the development from this spot, I feel okay about 1 2 1 2 structure. And the third wave on the black scale that you see here is either over or is going to be over very soon. You see? And that will open the gate for lateral movement. Here's my ABC, you see. Maybe, and that's a very big maybe, we go back to just deep under 50 briefly. 50, 49, yeah. And then we go sideways for about 2 weeks or so. That's not the top. In my mind, that's not the top at all. It's going to surge from that level to much higher levels for a long time. Yeah, for a long time. For those of you who didn't miss the analysis of the giant cap and handle pattern on the decade scale that I analyzed and I explained to you, then you know why I'm in the opinion that silver at current prices is still very cheap. Still very cheap. You take a long-term view of 3, 5, 7 years, it's very cheap. 50 is a bargain. That's what I think. Okay, so that's the weekly, and now let's break to the 2-hour scale, and that's basically the structure that I apply in the case of silver. We have a 1 2 1 2 3 4. You see, I think that we are coming close to the end of this stretch, final jump here, and going back to 51, 50, it's perfectly normal. Absolutely perfectly normal stuff. So no need to enter into a panic scene or something. If it suddenly drops by $2 on one day, you know, you get one day you get a drop of $2. Whoa, the sky is falling. Yeah, the sky is falling. Just step backwards for a while, and you will see that it's just a normal action of the market. And if you allow your account to have a bit of breathing space, especially if you trade the futures or on margins, as I explained. You should be all right. Should be all right. That's what I think. There are no guarantees. I cannot guarantee anything. I wish I could guarantee, but I'm just sharing with you my experience. I'm sharing with you the things that I do myself in my account, backed by my experience. That's it. I can't do better than that. Let's have a look